IT Administrator, Program Coordinator. He was wanted to be approached by the Ministry of Financial Services over design and particular certification taxation. And we're moving towards that. So we go ahead and get prepared for it. Okay, now, if you notice in your syllabi, we're not just going to be covering VAT. It encompasses taxation on the whole. Okay. This course is also going to be internationally accredited. Okay. Our partner in Scotland, Chartered Institute of Bankers in Scotland. We've been working with them now for 10 years now. They already certified 3 of our courses, our financial planner, our risk manager, and so forth. So, successful completion of examination, you have an international designation. Okay, now you've noticed your binder looks thin, but believe me, by the end of this course, quite large, okay? We have a lot to cover, 3 months. We're also glad to have our first minister lecturer, okay? Everybody knows Minister Pinder. Before he was a minister, his specialty was tax. He said he spent half his life in college learning tax law, so you're in good hands. All right? Don't be shy. Put them to the test. Ask them every question. As long as it's related to tax. No parliament, please. I don't know if you all have ever noticed. Every time I flip through the channels and I get to channel 40, who do I see around all the time? This one. Alright? So ain't nothing more you love than Parliament, but let's stick to tax. You're in good hands. Mr. Pinder, leave it to you. If you need anything, I'm the man. Look over the syllabi. Hopefully everybody has the draft legislation, VAT. Parking is not a problem. Get a restroom here. Behind you for ladies first, men second. That's about it. Coffee break. Well, we do have refreshments coming in at about 2. Okay. But I'll leave Mr. Pinder.
But I mean, maybe I'm going to get it or I'll see more.
It's scheduled from 12 to 4, but 4 hours is quite long. This is going to stay all day, but we have a lot to cover. There's a lot of reading to do, okay? A lot more material to get. So, with that, I'll let Mr. Pinder take over.
Thank you, Miguel. And
welcome. Just for a brief introduction on why we've done this course, and we have Sharice here from my ministry, who is largely responsible for formulating the curriculum on the course. Sharice, just stand for a moment. Hello. Especially in the world of financial services, certainly Miguel mentioned value-added tax, but that's not the only thing that's important with respect to tax and financial services. We have FATCA in the U.S. coming down. We have international tax policy, multilateral conventions on automatic exchange of tax, where in those types of conventions, there's an expectation that there's some knowledge in the industry, the knowledge base about tax and tax matters. And historically in the Bahamas, we've been a jurisdiction that had a lot of domestic talent in our industry in tax. And it's certainly an area we in the ministry thought was a gap, a skills gap, a deficiency gap. And as we progress and evolve the industry, we thought it important to try to bring the skill-based behavior practitioners, so these gaps don't develop, and then you see behaviors not being able to fulfill these positions in the industry. We have this in taxation, which is a rather involved course. They have me teaching this module, general principles of taxation, mechanics of tax systems, development of tax policies, operation of tax administration, and revenue collection. And then I think they are trying to convince me to teach the sessions on value-added tax at the end. As I said, they're trying to convince me. But certainly, I will probably be the lecturer at least the last module, maybe the last 2 classes on value-added tax with the Financial Secretary, John Roll, on those matters. But we wanted to start off with a fundamental base on tax. And if I could just get a quick idea, we don't have to take long, but who we are and what representative companies or industries do we represent? If we can just go around real quick. Excellent.
Well, they have been accounting lecture at COB.
Wonderful.
Federal Delaney, accountant.
Scott Spurlock.
Sharon Campbell, Examiner 5, Central Bank.
And I'm Charisse Rowe, visiting from Financial Services.
Oh, Sasha Sinner.
Yeah, the Thompson on the time. An attorney?
Joy Delivery, accounting.
Ken Arna, I'm working in the children. It's my own.
That's great. Excellent.
Christina Johnson, the right on
Excellent. Excellent. Good mix. Good mix. Now we have 3 texts which I drew the subject matter from today. I think they're in your binders. The first is a document called Principles of Tax Policy. This was a document that was commissioned in the House of Commons, the Special Committee of the Treasury Committee in the United Kingdom when they were reviewing their budget reviews for the period 2010-2011. So this originates out of the legislature and the House of Commons of the United Kingdom. It's a very, very good piece with respect to tax policy, with respect to an overview of and different elements of tax policy. And it's a very good read. I thought this was an excellent piece of material, and a lot of my lecture comes from this document. The second document that was a source document putting together the lecture is this document called Supporting the Development of More Effective Tax Systems. And this was a report commissioned to the G20, the group of 20 countries, by the IMF, the OECD, the United Nations, and the World Bank. It's a very, it's a rather technical document. I really reference only maybe the first 2 chapters of this document with respect to putting together this lecture. And the third document is this document called The Road to Improved Compliance. It's a benchmarking study of tax administration departments of a number of countries through Latin America and throughout Europe. It's a very, very instructive benchmarking study. Honestly, I am going to forward this to the VAT implementation team at the Ministry of Finance because I think there's a lot of good points in this on how do you effectively manage a tax administration department. What are the pros, what are the cons, what are the challenges within developing countries, which the Bahamas is, and what can we learn about that. So with respect to the mechanics of tax administration, this is a very good piece that sources benchmarks across a number of jurisdictions. This is my first time I've ever lectured. I've been lectured to a lot, both in school and professionally and at home, but I've never lectured. So take it easy on me. What I would like to do, and you'll see me referring to my iPad because I put some speaking notes on here, but I would also like this to be a dialogue. I'll follow a curriculum. You'll see the curriculum on the slides, an overview. I'll give a traditional lecture, but you'll see I isolate some areas where I think that there's it's constructive to have a dialogue with you, to talk about tax policy, and to relate what is being said to what we're experiencing today in the Bahamas, both with domestic tax reform and international tax reform. So please, I do encourage an open dialogue with respect to these matters. So we'll start. Tax policy for any country can be designed to really accomplish a number of goals. Many consider, and in many cases it's true, that tax policy is designed to generate government revenues for a government. That's really a primary purpose when you think about tax policy on the government side. However, tax policy, and I'm a big advocate of this, coming from a tax system in the United States. And just a little bit of background. I am a bar-certified international tax lawyer by the Florida Bar, officially designated a tax expert. I went through school, I studied tax law, I have an LLM in tax law, in international tax law. I practiced international tax and commercial law for about 10 years before getting into politics, and then I practiced it in politics until becoming a minister. So I do have a professional background and expertise, and if there's anything based upon my background that you can relate and would like to know, please, it's open game. And in that regard, I find certainly tax policy is utilized for revenue collection for the government. But I have a firm belief that tax policy likewise is used or should be used for other areas. And in my particular opinion, for economic development areas. Many think that tax is an impediment on business, but tax policy and tax reform can effectively be used to stimulate business. We see this in the Bahamas here, and we'll go into further detail through the slides, but we see this in the Bahamas with the Industries Encouragement Act, where manufacturers are given tax duty concessions. We see this in the Hotels Encouragement Act, where hotels and resorts are given duty concessions. So this is an example of tax policy that's used to stimulate economic activity. So certainly tax policy is a revenue collection measure, but it also can be designed for economic development. Some say that the 18th century economist and philosopher Adam Smith, who wrote the book The Wealth of Nations, established really the overarching general principles of tax policy and rules of taxation. Adam Smith came, 18th century author, and he really set forth 4 canons of what we think of as tax policy and taxation. These are listed here, and I'll read with a little bit of expansion of what's on the slide. The first canon was that the subjects of every state ought to contribute towards the support of government. So there's a defined principle that every citizen has a right to contribute to the operations of government. However, this contribution, as nearly as possible, should be in proportion to their respective ability to do so, in proportion to the revenue which they respectively enjoy under the protection of state. So in other words, how much you make in the particular country. And any deviation from this canon results in an inequality. So essentially, that canon speaks to the proportionate taxation. The poor should pay less than the rich. So you should pay in proportion of what you are able to accumulate from within that government or within that country. And that's listed there. The second canon that Adam Smith portrayed, remember these are 18th century proclamations. Just think about the relevance of what he said in the 18th century to today. The tax which each individual is bound to pay ought to be certain and shouldn't be arbitrary. So you shouldn't have to guess. It should be certain on what you are obligated to pay. The time of payment, the manner of payment, the quantity to be paid, all of these ought to be clear to you, the taxpayer, the contributor. Otherwise, they're placed in more or less in the power of a tax gatherer who can use it for oppressive purposes. So if it's not definitive, it's not certain, if you as a taxpayer do not know what has to be paid, when it has to be paid, and on what basis it has to be paid, it puts the government in the position of where it could use tax policy as an willy-nilly, penalty-wise, etc., etc. The third overarching principle that Adam Smith in the 18th century proclaimed was that every tax ought to be levied at the time or in the manner in which it is more likely to be convenient for the contributor to pay. So there has to be an understanding of convenience to the taxpayer. For instance, in the United States, everybody knows April 15th is tax day. You have January, February, March, and half of April to figure out what you owe, to do your tax returns, to get your books in order, and to file on April 15th. So that is predictability and fair in that it gives you enough time to prepare. The fourth canon that Adam Smith spoke of is that every tax to be so contrived as both to take out and keep out of the pockets of the people as little as possible over and above what it brings into the public treasury of the state. So there should not be an excess, and there should be limited indirect taxation in that regard. The equality of taxation. And these cotton principles, like we said, they date back to the 18th century, but they still remain very relevant today. When you hear about the VAT discussions in the Bahamas and tax reform, these principles underlie a lot of those discussions. Is it predictable? Do I know what I have to pay? Do I know what I have to pay it on? Do I know when I'm going to have to pay it? And these are all discussions we hear all the time on tax reform in the Bahamas. The Treasury Committee has taken these and condensed these a little bit to say, really, they condense what Adam Smith said in the Treasury document to two principles. The belief that tax should be based on the individual's ability to pay, that's reference to Canon 1 we discussed, and the benefit principle. So that's the ability to pay principle, and then there's the benefit principle. The idea that there should be some equivalence between what the individual pays and the benefits he's going to receive from the government. So I'll give you a real-world example. Yesterday I was in Spanish Wells with the Minister of National Security speaking to the fishermen on poaching. And one of the fishermen stood up and said, I pay my taxes. I pay all of this money, business license, I pay a royalty on the crawfish I get, I pay 45% on my food, tax on my gas, I pay all of this. And you're not defending us and you're not protecting the waters. Well, that's an expectation based upon this second principle. What are the benefits that he expects to receive based upon what he pays to the government? His opinion was he's not receiving the proper benefits within the industry that he participates in. So that's evidence of what we see today of this real-world canon and principle. So in the Treasury Committee report, they identify really over a bullet point of 6 principles. Basic fairness, which is what we spoke about. Supporting growth and encouraging competition. Something that I believe a tax reform policy should be important. Certainty. What am I going to pay? When am I going to pay it? And what's it going to be based on? Stability, practicality, and coherence. So, an approach that promotes these overarching beliefs is preferred. And to increase predictability, there needs to be clarity on approach. This is an overarching statement here, where coming out of an OECD report that's very, very significant. And it says, tax system design is also closely linked to domestic and international investment decisions. So this is the basis behind economic development policy, including the terms of transparency and fairness. Strengthening domestic resource mobilization is not just a question of raising revenue. It's also about designing a tax system that promotes inclusiveness, encourages good governance, matches society's views on appropriate income and wealth inequalities, and promotes social justice. So this is an OECD type of definition that's consistent if you look of the Adam Smith canons built into what they say. So again, we go all the way back to the 18th century on the basis of good taxation. And these are those 4 canons in simple forms: proportionality, transparency, convenience, efficiency.
Commissioner,
Yes,
sorry,
please.
just on the six principles,
From the,
just how,
from the Treasury report.
Right. Just, can you give me a real world example of the second? I understand the supporting group, but the encouraging competition.
Encouraging
Just to
Sure.
help me clarify, help me get
So-
it,
So, let's look at, for instance, the Hotel Encouragement Act. Right? If you would read the concessions that are available in the Hotel Encouragement Act in the Bahamas, you would see that hotels in Nassau have a different standard for concessions than hotels in the Family Islands. You need more rooms in a hotel in Nassau to be awarded the concession. You need fewer rooms in a Family Island to be awarded the same concession. So that's using tax policy within an exclusion for economic development. That supports competition, because you want to support competition in an island nation like the Bahamas, in the Family Islands in that industry as well. So you're utilizing tax exemptions and tax policy to try to give Family Island participants in the hotel sector more of an advantage, and therefore trying to equal competition within that industry nationwide. So that's sort of an example of the use of tax policy to promote competition within an industry.
It's just interesting that this is written, like, the hotel encouragement. The basis for that was, I guess, our old form, or our current, or maybe the initiation of our current form of taxation, which is just the
Tariffs.
compute, the tariff. Right? So it only speaks to that. So will it be changed now? I mean, when we get into the other forms for the value-added taxation, would that be effective anyway?
No, on the hotel encouragement exclusions, that won't be affected in any way with respect to value-added taxes. They'll get this exclusions on the imports for value-added tax as well, so that will stay. Those benefits will stay there. You also have, for instance, in the United States, you would have certain small business credits. They aren't an income tax system, so you get deductions and credits off of income to calculate what you owe. And a small business in the United States will get certain credits against their tax owed to stimulate growth that a larger business wouldn't get. You also have a system in the United States where minority-owned businesses, and you see this more on the state level than maybe the federal level in the United States, but minority-owned businesses get certain tax preferences and deductions with respect to that to encourage competition and equality and growth amongst different types of businesses. So really where you see that principle of encouraging competition is how do you manage your benefits, your exclusions, your deductions, these types of benefits you can offer through a tax system to a company to encourage that type of competition.
My question to that, stemming
Please.
from the example you gave, is, how do you avoid inequality in terms of, you give the example in the Family Island and here.
Yeah. Well, once you get past once you get to the size that it's applied to, for instance, in Nassau for hotels, then you're on a level playing field, right? So you are given the benefit of tax policy or tax breaks, really, as a smaller entity, and then once you mature, once you grow, you're treated on an equal basis. So it's a stimulus to encourage growth and encourage an equal playing field. And a lot of times where you see disadvantages, Family Islands, there's cost disadvantages, there's traffic disadvantages. You don't see the number of tourists going to Family Islands that come to Nassau. Small businesses is the same way. It's capital and capacity. So you want to stimulate small business growth. Historically in the United States, minority-owned businesses did not have experienced the successes that their counterparts did. So they provided those. But there's always a cap, right? So once you grow to a certain level, everybody plays on a single playing field. So an overarching principle of tax policy, again, we're talking about general principles of tax policy initially, is that you look at tax policy, not singular, but you look at it affecting a whole range of activities and range of matters. From where tax should fall, in other words, who should be taxed. What's the aim to achieve? We've spoken about that with some exclusions. The aim of certain exclusions is to equal economic development. Generally, it's for revenue purposes. And then the administration and the complexity. So this kind of outlines, as a tax policy, the first module of this course. What is tax policy, and then how does administration and complexity affect that tax policy, which is the tail end of what we'll speak about today.
Mr. Ryan,
Yes, please.
when you speak of taxation, you're referring to not simply one form of taxation.
That's right.
When you speak of taxation policy,
That's right.
but rather all of the methods of collecting revenue or collecting funds from the citizen.
That's right. No, that's absolutely right. I was able to, I met with, for instance, the Seychelles, when I was at the WTO conference, and we started talking about their tax policy. They're a small island country, primarily tourism-based, very close to the European Union, 250,000 people. We're a small island country, tourism-based, very close to the United States, 350,000 people. So I thought, what are they doing? They're acceding to the WTO, and let's just compare jurisdictions. A few years ago, they had some significant debt problems, and they entered an IMF program, just like we see Barbados and Jamaica and the like doing, what we're trying to avoid. We said, we have a corporate income tax, we have a value-added tax, we have duties at the border, we have a personal income tax, we have a social security similar to our national insurance. They said, so you have 5 different forms of tax policy. I said, well, we have 2. Right? So when you talk about tax policy as a whole and how it affects different types of businesses and different types of activities, we talk about it globally. We can use specific examples. With the economic competitive, we use duties, and I used income tax as an example. So, tax policy, properly structured, could apply to any form of tax that we look to utilize.
But the reality is that we have more than 2. When we look at simple things such as
Property tax.
registrations.
Those are fees.
Correct, they're termed as fees.
And you don't usually see the principles of tax policy applied to fees. So you don't usually see, sometimes you might. Our business license structure is structured similarly to what a tax would be structured. You really call it a fee. And some people make the argument it is a tax because it's structured that way, where if you have under $200,000 turnover or $100,000, you only pay $100, and then it's a multiple of your turnover. Right? But generally, for instance, fees for the regulations. I go to the Securities Commission, we want to be an asset manager. You don't have different fees necessarily for different volumes of business. So it's applied a little differently, but I get your point. So there's 3 principles here that I would like to point out. I don't know if everybody could read this. A tax structure which is theoretically structured to promote growth, so that's the economic development arm, will not succeed if businesses are faced with constant change, or if the inefficiency of collection outweighs any benefits. So what we're trying to do here is, you can look at the curriculum today, but even though it follows an order, note that one is very instrumental to the other. So we want a policy to promote growth, right? But if there's constant change, there's unpredictability, or if there's inefficiencies, those can outweigh any benefits there are of promoting growth. And taxes can reduce growth on the second one, even if they are stable, even if they are clearly targeted, predictable, and efficiently collected. Right? So you got to be careful in creating incentives, which is what we've talked about a lot already. That will they distort the economy? Will you create so many incentives you're not generating the proper revenue, or is it the wrong type of incentive that will distort economic growth? And the coherence of the system, the actual tax system, affects the principles of fairness and growth. So a system which is rife with anomalies will not be considered fair and will impair economic performance. Anomalies, complexities, something that's not unified, something that is very segmented and not thought of as a general policy, can actually cause restrictions and impair the economic performance of those businesses. In my honest opinion, we have that today in the Bahamas. When you have to spend an entire day out of your busy schedule to make sure your business license fee is paid, then you got to run down to the treasury, pay your customs duty. Then you got to go and make sure your real property tax is paid. But before they let you in and give you a license to bring your product in, you got to go to national insurance and get a national insurance letter, right? All of these types of things are exactly what this is, rifled with anomalies, right? And it causes a real impairs performance for economic development. So you got to be careful when you think about tax policy in that regard and implementing a change that you could think you're doing the best thing, but if it's not implemented properly, it could fall apart. If it's not cohesive, if there's all these different isolated islands, it could fall apart. So tax policy reform is very important. And this is why you have entire professions like mine dedicated to tax. I met with one of the senior accounting, the head of Baker Tilly. We have Baker Tilly Gomez right here, right? But Baker Tilly is an international organization, just like Ernst & Young, Price Waterhouse, Grant Thornton. And he said 23% of his staff worldwide now is dedicated to tax. Almost as much as he has dedicated to audit. He has dedicated to tax. Because of these types of anomalies. You go sideways on one piece, and the whole thing can fall apart. So questions on this. This isn't very large, but things to consider. What do you think are important elements of generally overriding tax policy? Are there some, from a general point of view, you think that are more important than others? So you have revenue collection for the government, you have economic development, you have stability and predictability for the taxpayer. All of these general principles, think about, is there something that you feel is more important? As a taxpayer, what is important? Or if you're a regulator of the government, what's important to you? So the importance of general tax principles in formulating policy can depend on who you are. A taxpayer, the government, or a regulator, or a business owner. An individual taxpayer can have different things that are important to him than a business in what's important to you. And then as you evolve tax policy, you have to take all of these things into account. So, you're a lawyer, right? What would be important to you as a lawyer?
Well, I thought about it firstly as an individual outside of, I think fairness and certainty, quality, certainty, in terms of the time and the amount. I think that's the most important thing to me.
And Pedro, you have a small business in your profession, competing against PwC, Ernst & Young, all these guys. As a small business owner in your profession, what would be important to you from a tax policy point of view?
Fairness and efficiency. The ability to pay your business license or the taxes in an efficient way without spending within. Certainly, well, there's certainty as well, knowing what you will have to pay. Those are the more important ones.
And you're a police officer, right?
Yes.
So we can kind of draw, and we have central bankers here as well. So as a regulator, you will have a certain responsibility, maybe to enforce elements of tax. You as a police officer may be called upon to go enforce certain tax violations, for instance. The regulator, in order to issue a license, you may have to know that they have reported and they have filed a tax return, they paid all their taxes. So, those are some of the things from your point of view in your profession that might be important to you. The actual compliance elements of this whole regime. Right? So this is my favorite part, right? The actual development of tax policy. I'm a politician, yes, I'm a minister, I'm a policy man. I really, really like policy. And speaking about tax, getting down to tax policy. And did everybody put their email address on this? So what I'll do also is I'll email to everybody both the slides and my speaking notes that I prepared, so you could have those as well. Because you did say you have to take a test, right? And so 3 features of tax policy that are essential. This comes from the OECD study, but I think it's quoted in the Treasury Handbook. So long as taxation affects incentives, it may alter economic behavior of consumers, producers, or workers that reduce the efficiencies. So this is the anomalies principle. The distribution of taxation's impact across a population raises issues of equity, fairness, which is what has been heard today, some of the primary concerns, which must be given substantial weight even if it entails cost in terms of economic efficiency. So that's important, and we've heard that from people who've spoken up today. Fairness is a very important element of tax policy, and even if it has an adverse impact on economic development, it's more important to be fair.
Question, how are we defining fairness?
That's a great question, and that's something that I have a slide a little bit later on that, but the consensus is that you must be fair. There's no consensus on what is fair, right? There's no consensus on what is fair. What may be fair to you is not fair to me. It's kind of a subjective determination. Fairness to a regulator may mean accuracy and being on time with your filing so I can do what I have to do, right? Fairness to a business owner may be predictability. I know, and that certainty of the business owner, that's a fairness piece. But in consultations, you'll see later on, we talk about political will to do these things, right? Sustained political will, which is not easy. It's important that you hear the elements of fairness and you try to, and they may fit in different categories of when you look at tax policy, but you have to gain a consensus that my tax policy reforms has addressed your matters of fairness. So I'll give you an example of fairness with our VAT reform. So I'm the minister responsible for manufacturers, for industry, the Industries Encouragement Act, and the concessions available to manufacturers in the country. So the Manufacturers Association came and met with me last month, and they said, Minister, under the current regime, we get an exemption at the border for our duty. Things come in duty-free that you have approved. Right? However, as the VAT legislation is drafted, we have to come out of pocket and pay at the border and get a credit on the back end of everything paid. Says, yes, that may be a tax-neutral point of view. And some people would think, oh, there's no net tax difference, so it's fair. Right? However, they said, it's a cash flow issue for me because I have to come out of pocket and pay, even though I'm going to get it on the back end. And they say, and that's not fair to me. That's not fair. So, because it was a zero tax, net tax change, finance may have been sitting there and said, this is fair. We're not changing the bottom line for these people. Right? But operationally for them, it's not fair. So the question is, how do you now take care of both issues and to be fair across the board? So I told them, bond it. bond what you would have had to pay. You have to bond it today anyway. Bond with that as well. Finance ensures that risk is taken care of and it's zero net. Business, no out of pocket at the border. That's fair across the board. So when you talk fairness, it depends on who you're thinking, who you're coming from, where you're coming from. So as we said, tax reform and the implementation of that reform is not an easy exercise at all. At all. And to be implemented, it requires an extreme amount of political backing and political will. And especially in small countries like the Bahamas, where your population is just not conducive to change. It takes an enormous amount of political will. And one of my colleagues frequently makes the point, in every jurisdiction in the Caribbean that they've put in a value-added tax, the following election that government's been voted out of office. Every single jurisdiction in the Caribbean, every single jurisdiction in the Caribbean has a value-added tax. And every single one of them, the government has been voted out of office after they put it in place. So maybe I'll need to look for a job in 2017. So it takes an enormous amount of political will, right, to affect these types of changes and to affect these types of policy reforms. Especially in this region, small population, small country, just very standoffish to change in how you do business and how you live. So it's an important element. So these three factors, we just really spoke in a little bit about how they affect the Bahamas. We spoke about it in the context of manufacturers and what's fair on each side. But are there any other examples that you can think of? Any other examples that would address these policies? And really, I want to hear about some opinions because I want to talk about this later on the compliance aspect. What elements of compliance? We have a high cost of compliance here in the Bahamas with our bureaucracy and our administrative systems. High cost to government and high cost to business for compliance with tax matters. I gave the example, to pay all of your taxes as a business, you have to go to at least 5 or 6 different locations to do that and deal with at least 5 or 6 different departments. Heaven forbid you go at lunchtime. So that's one of the areas that I believe is one of the largest impediments to doing business in the Bahamas, and one of the largest gains we can accomplish through this tax reform exercise we're doing, and the centralization of the tax compliance operations within a central authority. And I would love for your input on that, because it's an area where I think we fall very short on in our tax administration. Very short. It's gotten a little better with import duties with the port, right? Because it's centralized. Before, you may have had something coming in on 2 or 3 different docks. Right? So I don't know if anybody's had that experience or concurs with that. I think you do. You keep nodding your head. Yeah. So in the Bahamas, I think that's an important element. Yes.
So isn't this with the Central Revenue Agency
Exactly.
trying to accomplish by bringing together all of the important towns?
That's right.
This is nice.
No, that's exactly right, and that's why I think we have a tremendous opportunity in this reform process to create efficiencies to help business with that central revenue authority and bringing all that together. And we're talking about tax, but we have some regulators in the room from the central bank, and but we've heard the issues with the regulators as well with respect to segmented. Securities Commission, Insurance Commission here, central bank, but what if you have a business that kind of blends multiple regulators? And there's always been this talk of a super regulator, this talk of 2-tiered regulator, and how do you bring it together to merge the Insurance Commission, Securities Commission together and run a 2-tiered type of regulatory scheme. So in the financial services sector, On the regulatory side, it's the same thing. And speaking to you regulators, you may, the segregated assets issue that arose between the central bank, Securities Commission, and banks who had securities operations and had clients, there's the security side and the bank side, and what do you do with those assets? That was a whole issue with silos of regulation. Inefficiencies in compliance on the tax side is very similar. And a lot of times, a much more significant problem. So these are some other similar quotes that we have in here, where you may theoretically structure your tax program to promote growth, but if it's subject to constant change, the inefficiencies of collection outweighs the benefits. So if every year I'm changing something fundamental in my tax code, right? Even if, in theory, my tax policy is formulated to create economic growth, but if there's a change, every fundamental change from within, you as a business owner every year don't know how you're going to change. You don't know if it's going to be predictable, and then you have to invest and extend costs. And not only that, the government has to do so. So the costs associated with constant change can eliminate anything to do with economic growth.
What preparations are being done to facilitate that problem that I foresee that to be a big problem with the implementation of that? You run into problems that you didn't foresee, and so you're constantly adjusting, and then maybe you have to increase your personnel, and so the cost of that becomes a different cost,
Nope, that's a big issue, right? So a fundamental change is just that, it's a change. So there isn't an expectation that the government nor businesses will not experience some sort of change in procedure, maybe some cost elements. You hope it to be on a one-time basis. And you hope that the government can help facilitate that methodology in any way it can. I'll give you one example. Bless you. What's today? So Thursday, I met with this company out of Washington on FATCA implementation. FATCA is this exchange of information on taxes with the United States that we're going to have to comply with. And I told them, I said, listen, my biggest concern, you've been talking to me about these banks are your clients, these banks are your clients. I'm not worried about the banks. Banks are big. Most of our banks are part of multinational institutions that are going to get directives or platforms or procedures from their head office, and wherever it is, and implement. I said, but you have small businesses, right? You have small asset managers, you have small fund administrators, trust companies. Pedro's an accountant might be a reporting entity under FATCA, depending on what he does, right? I want a platform that's simple, cheap, and as standardized as possible to address that area of my industry. Because there's anywhere between 600 and 2,000 of those businesses in the Bahamas that will need some sort of platform to comply with that reporting. So you have to be able to, you have to understand there's a cost of operations, but you also have to understand from the policymaker side that you need to try to work to try to find as simple a solution as possible, and then hold steady with what you're doing, at least in the medium term, so you're not causing every year that reinvestment in a shift, right? So you have to put it in place, let it settle down, let the operations settle down, and then tweak as necessary. And you'll see, we'll speak a little bit later on how those tweaks go, right? And the administration part of that. You don't do them quick, you don't do them drastic, you don't do them without preparing the taxpayers for what you're trying to do when you try to do those shifts from within the system. So yes, unfortunately, any big implementation like that, there is that element. Government's responsibility is to try to work and try to figure out a stable solution, and then to hold it at a level where you're not causing constant change, and that's where this is getting at. Constant change towards that. So we just spoke about, and we really answered that question in the context of what you were speaking about.
Minister?
Yes.
A quick question. It just seems to me, going backwards, I guess, it just seems to me that when you look throughout the world, constantly we see in the houses of Parliament, especially in economic downturn times, that persons are constantly talking about changing the tax policy, changing the tax structure. So this seems like a conversation that is consistent. And maybe we'll speak about this later, but it seems to me that then that means within your, when you are creating and designing your tax structure, then there's something should be in place that allows for this kind of shifting and changing in a
Well,
policy.
let's use an example, right? So you don't want fundamental shifts, right? But you also going to the preparation side that we spoke about, even with certain shifts. We see every budget year in this country, bar none. The duty rate gets changed, tariff rate gets changed, something gets changed. Regardless of administration, regardless of anything, for decades that's been the case, right? So you would have remembered, I think it was, I'm trying to think based on elections here, but I think it was 2011 budget under the former administration, where they suddenly changed the duty rates with respect to cars. It went from value to engine size, right? The industry claimed, I wasn't government then, so I couldn't tell you if true or not. We weren't consulted, this affects my business. One of the car dealers said, if you remember, it was 1.8 liter was a lower rate. I have no cars with the Ford dealership. I have no cars with that size engine in it. So I am automatically at a competitive disadvantage. You're going to kill my business, right? Even though it's a change within what we see happening with tariff schedules every year, this was a change of metric. So it was a fundamental change within duty, right, that affected that company, right? So there was a cry about that, legitimately so. Clearly, the former government, Prime Minister thought so, and changed the metric from 1.8 liters to 2 liters, so that dealer could be accommodated. So you got to be careful, and there will always be changes in tax law. Otherwise, there would be no business for tax lawyers, right? Well, no. I tell people the most powerful lobby in the United States of America, in Washington, is the tax bar. No doubt about that. The most powerful lobby in the United States of America are tax lawyers. Clearly not here because I'm the only one. but you know, that's a fundamental element of change. You have to not do fundamental changes, you know, routinely, and you have to do it with as much dialogue as possible. I mean, we imposed some changes in this last budget that we probably didn't consult to the extent we should have, and you know, industry was not so pleased. I'm the Minister of Financial Services.
Minister, you mentioned FATCA,
Yes.
which is part of the U.S. tax policy. Having regard for the OECD's principle with respect to fairness, is the U.S. tax policy considered fair under under that principle and fair globally?
I think that with respect to FATCA, the fairness principle is not necessarily with respect to what the tax is, because they're not changing what their tax is. It's to the compliance and collection side, right? So is the implementation and is causing foreign financial institutions to be your reporting agency rather than the taxpayer fair, right? Do I think it's fair? I do not think it's fair, right? However, the G20 largest 20 economies in the world think it very fair because all of them have said automatic exchange of information is the new standard. Why do they think it's fair? Because they can't do their job. Right? So, you had heard me refer to, and we'll refer to it later, and I have a slide on it, but there's an element of tax administration called simplicity. And simplicity means, they conclude, is the language used in the tax law, the ease of understanding, because not everybody's a tax lawyer, but this applies to everybody. If you saw the first paragraph we had, it said every person touches their tax administration department in their country in some form or fashion. Everybody. So, you look at the United States, their tax code is about that long, right? I think it's 7 volumes, that long. The regulations that interpret that tax code are that long. That long. Not simple. So the administration and implementation is not simple. The collection efforts, and when we talk about simplicity later on, you'll see this. It says that you get low taxpayer morale and a lack of effectiveness of compliance and collection when you do not have a simple as possible tax regime. And this is why these FATCA type initiatives now are coming about. Because nothing in these large countries with respect to their tax systems and administration is simple. So you have low taxpayer morale, high tax avoidance, and inefficient collection. So what do they decide to do? Make us report for them. Fair? No. No. But these fairness principles mean your domestic tax principles, not your international relations, right? I mean, that's the position they take. But that's why you're seeing that, because of the issues related to their domestic tax codes and the complexity and lack of simplicity. So, with respect to tax policy, and I think the Treasury report does a very good job with respect to breaking this down to help us understand even further. They say in the development of tax policy, there's 2 general themes. Basic, fairness, and this is where we'll talk a little bit about what is fair. And the basic tax principles, it's fairness and should support growth and competition. So you can see the themes that are inherent in this presentation. And procedural, certainty, stability, and practicability. These are overarching themes. And although it's easy to put on a slide that we're segregating these tax policy and these elements, it's not always that easy. And it's always mindful that they work together. So you can fall off on one and it will directly affect something else. So let's talk a little bit about the basic principles. The first one is fairness. So there's a universal acceptance, like we said, that your tax should be fair. And if a tax is viewed as unfair, it is very likely that there will be a culture of avoidance of that tax. And ultimately, the tax policy itself loses legitimacy. And that's just human nature, right? If you think that you are being treated in an unfair basis by your government or the rules that govern what you're doing, you're going to build up this culture of avoidance. Why should I be treated unfairly? Forget these people, right? And if you get enough of that avoidance and non-compliance, the whole integrity of the system collapses. So, and we heard, 3 or 4 people say the most important element to them is fairness and predictability. And if you violate that from a government point of view, from a policy point of view, the whole thing falls apart. And it becomes illegitimate. It just does not work. Like I said, there's very little consensus on what is fair. And we use the example of the manufacturers to demonstrate that. The government thought they were doing something that was fair. Manufacturers thought the government was doing something that was unfair to them. But you can reverse it, right? You can reverse it. I'll give you an example. The hotels. The hotels pay tax on beds, bed tax. So if they rent this room this day, there's a tax on that rental, on the fee that they pay. However, the hotels have gotten sick, right? They said, no, it's not $300 a room for Atlantis. It's $200 a room for Atlantis, a $20 facility fee, $50 to go on the slides, $20, still $300, right? But you're only paying tax on $200, right? You're only paying tax on $200, and this is a fact. This is what is going on. So this now becomes unfair to the government, right? Because the expectation of revenue from this tax regime, right, is now illegitimate. So what do? No more bed tax, right? You pay 10% VAT on everything, right? So no more bed tax. You get rid of the bed tax. 10% across the board. So it becomes illegitimate. What do you have to do to it? You have to throw it out and change it. So it's not only, fairness goes both ways. Fairness means that the government should be fair with industry, the manufacturer's example. And going back to one of the core principles that we started with, an Adam Smith principle, everybody has an obligation to pay their fair share, right? And if we're going to give incentives to the hotels, duty concessions, they absolutely have an obligation to pay their fair share. Matter of fairness. So if they get full concessions on one side to promote economic growth, and this is how it falls apart, right? Full concessions on one side to promote economic growth, and then they try to game the system on the other side, right? It falls apart. So you can't have a policy of economic growth where the fairness principle undermines that. It doesn't work. And that's a real life example of what is happening today. So fairness goes both ways. Government's going to be fair with you. Everybody has an obligation to pay their fair share, and in proportion. And in proportion. So the element of fairness. I keep answering my questions before I get to them. So what are some elements of a fair tax system and policy? We've discussed that, and we've given concrete examples in industry today to really demonstrate that. My favorite, support growth. So these are some elements, but I want to read the full statement. And it's from the OECD report regarding growth. And I think it's a very good statement. It says, and I quote, "The tax system plays a crucial role as it is likely to impinge on many factors." We've spoken a little bit about that. The level of the taxes that are raised, the tax mix, so the different types of taxes you're paying, the quality of the tax administration, the complexity of the tax rules and the tax compliance costs, we spoke a little bit about that, the certainty and predictability, two key words, for households and businesses of the taxes that have to be paid, the network of tax treaties, so when you're talking about international business and those in the financial services sector here can appreciate, the network of tax treaties as well as the specific design characteristics of the individual taxes, how they're implemented, including the availability of tax incentives, the hotels, the manufacturers, and the broadness of the different tax bases can have an impact on the country's rate of growth, the economic rate of growth. So all of that factors into the economic growth of a country, right? And you see the word, and I kept saying I really should have introduced this concept early on, and I never wrote it in. tax basis, the tax base. What's the tax base? And the tax base is a fundamental term for tax policy. The tax base is that which is taxed, that pool that you're taxing. So people say, why value-added tax? Right? That's a question all the time. Why value-added tax? Well, because value-added tax reaches a broader tax base. So under the current regime, let's look at how we pay taxes today. It is the merchants, it is those that sell goods who carry the disproportionate burden of taxation in this country. So, I'm Kelly's, right? I pay business license, yes, but I pay duty on every single thing I sell in that store, right? Okay, that's a good side. Now let's say I'm a lawyer, right? I pay business license, yes. I ain't gonna pay nothing else. I don't sell any goods. So my remittances to the government are disproportionate. Essentially, that revenue is outside the tax base, right? Because it's not being taxed. So we are a services-based economy. You hear that a lot. And primarily, the services aren't being taxed. Hotels are being taxed, yet they're manipulating it, so they're taking a third of their tax base out of the tax system, right? Because of what we described. And what did we say was the solution to that? Get rid of the bed tax and charge that on everything. Why? Because it brings back the tax base. The Bahamas government gives up $200 million a year in tax revenue on incentives. We spoke about my favorite policy, which is right here, to support economic growth. How do you do that? We forego $200 million of revenue. Manufacturers, hotels, now some restaurants under the current policy, agriculturalists, all of these are tax exempt entities when you're talking about your tax base being duty at the border. We give them duty-free concessions. So all of that is outside the tax base. So what is our tax base? It's a very narrow sliver of those businesses that sell goods. Right? What does value-added tax do? Brings in the services, because you've got to pay tax on your services. Right? Lawyers got to add VAT to there, engineers have to add VAT, architects have to add VAT. Yeah? So all of these services-based economies that generally go untaxed now are part of the tax base.
But Minister, and I clearly follow what you're saying, but some services I deem luxury services, and some services are services that you can't do without. For example, case in point, let's just say I hire a contractor to construct a home for me, and he was in breach for a number of reasons, poor construction, workmanship, and everything else, and I have to hire a lawyer, and I have to pay the legal fees. I'm not hiring that lawyer because I want the luxury of doing it. I'd rather not have to go through the process of having to actually bring a legal suit against this contractor. So now I have to pay the legal fees, and then you're going to add on taxes for that service that is not something that I wanted to do in the first place, but I have to mitigate my costs. I have a right to mitigate my costs. So some services, yeah, I can see as a luxury service. You can, apply VAT to that, but some services.
But it's not necessary. But tax isn't necessary. Tax policy doesn't only apply to luxury services.
I know, that's what I'm saying.
So you go to the food store, right? Pay duty on food.
Yeah.
That's not a luxury service.
It's an essential.
It's an essential, right? So, it's not just a matter of luxury services. I'm constructing my, I'm testing some things out, right? But I'm constructing my contribution on value-added tax, right? So I do some research the other day, and it would have been handy to have that chart here to demonstrate this, the narrowness of our tax base in this country, and how it's unsustainable. So you have a metric called tax revenues as a percentage of GDP. In other words, you take your GDP, what percentage of tax revenues is that? And that internationally is recognized is how heavy do you tax your people, right? How heavy do you tax your economy? The OECD countries' average rate, I think, is 32%. Their tax revenues as a percentage of GDP. The lowest country is Mexico within that OECD group at, I think, 24%. The average is 32. Guyana in the region, 37. Barbados, 35. Jamaica, 32. Trinidad, 34. The United States is 32, I think.
What about Canada? Do you know?
Canada is generally a fairly high tax jurisdiction. So it's an OECD country, so it's certainly higher than 23%, of which Mexico is the lowest. What do you think the Bahamas is? 18%. 18%. I don't use the statistic, but it's in your book. It's in the second set of materials, the OECD material somewhere. It says just to meet the Millennium Development Goals, which are these goals set by the United Nations of eradicating poverty and all of these social goals. They say just to meet the requirements of meeting those goals, your tax as a percentage of GDP should, I think, be 21%. So our ratios don't even line up to provide the internationally recognized social development goals of the country. Please.
Well, I have a comment, just kind of piggybacking off the gentleman right there. I didn't get your name, but I think in consideration of that, what you're putting together, I think you mentioned that, yes, we only pay 2 form of taxes, but overall it really equates to about 5. So do you factor that in? Because these are considered fees, but they're still considered part of the
By the
taxation.
metrics, those are factored into the 18%.
Okay, just wanted to make sure.
Those are factored in for that calculation. So why is that? It's because our base is so small. Right? And when you look at the average duty rate is 35%, and your average tax rate as a percentage of GDP is 18%, that should tell you the scope of your tax base. Let's get back to where we started. The scope of the tax base that goes untaxed, right? And that's what this is. All of this and different tax bases have an effect on your economic development. So let me throw something out to illustrate this. This is a principle I support personally. So I'll give the fair disclaimer, I do not speak on behalf of the government when I say this. But this is my personal belief with respect to tax reform and tax policy in the Commonwealth of the Bahamas. So the goal is to raise $200 million additional revenue. That's the number that we have calculated to be able to have a sustainable basis of tax reform, revenues we need to support the obligations of the government, and so the number is $200 million a year. We can get rid of the incentives, that's $200 million, right? But you do not support growth by doing that. So that's not an option, right? So you look at the quote I just read, and you look at the end of it. The broadness of different tax bases, right? So we spoke about value-added tax as an example of how you broaden the tax base into services. Well, then what are other options? Right? So if 15% VAT because we want to broaden the tax base, that's just too much, right? And this is what the mindset, right? I sat down for an hour and a half with the owner of Wendy's and Marco's Pizza the other night. An extremely heated discussion on value-added tax in the middle of a restaurant, right? And I said, okay, I've had enough of this. I said, what if I told you I was going to put a value-added tax at 10%, and instead of July 1, it was January 1? All right, I could do that. I can do it. You get that, and you're a hero. I have no problem with that. I can comply with that. That's easy. No problem. No. right? So his issue wasn't that. His issue was how much of his tax base was being taxed, right? So from a policy point of view, think about it now, that argument, what is that discussion from a tax policy point of view demonstrate? It's not the method of tax, it's the amount of tax base and the predictability and you know, credibility of that whole system with the too fast, right? That's the, so you take that discussion and you go from a tax policy point of view and you stand back and you say, what does that mean? That means that we're taxing his tax base too much and we're not being fair or predictable in this fashion, and we're doing it too quickly.
Isn't that more the psychology of it? Because in reality, there's a small difference between 10%
That's right.
and the 15%. And secondly, with respect to value-added tax, it's a consumption tax. It's not a business tax.
That's right.
So it has minimal impact on him to the extent he can extrapolate that to impact the amount of customers that he continues to have.
Right.
So it's really the psychology.
And we go back to how we predicated this whole course on that. We do not have a formulation of tax policy when we in our domestic population, right? So this is the real challenge with tax reform, is that it's very difficult to explain because we've never had that formulation of tax reform here, like a tax policy, right? Let me just finish this and I'll come right back to you, because I want to address this issue of different tax bases, right? Well, like I said, my position, not the position of the government. And to demonstrate, I use that example one with the Wendy's guy to show you that his concern is tax base. So what would I do? Well, we have a tax base that's untaxed in this country as well. Domestic gaming, right? Web shops. Domestic gaming. Let's call it what it should be, not what it is. It should be domestic casinos, right? Regulated under the gaming board. Proper. If you go to London, you walk around London, you see casino, right? Something that the central bank can go in. Let me see your money laundering rules and requirements. Let me see if you're complying with AML. Make sure all of this is in line. And I'm going to tax you 40%, 30, whatever. That's a tax base. That's a tax base, right? So you take that tax base and you say, if I have that tax base, I could lower this tax base, right? The tax on this tax base. So I could go to VAT to 10% if I do it over here. Now I have a broader tax base without touching economic policy. Actually, that may support growth because it's a lower base on consumer items, right? So that might be something that would support growth with a new tax policy. Then you go back and read the IDB report, and the IDB report says there's 16 scenarios, and only one will stimulate growth with that. 10% rate, 10% reduction in duty, and a social safety net. Supports growth. Not inflation, supports growth. Right? Supports growth. The third type of expansion of tax base I would advocate for. So that's two. 10% VAT, domestic casinos. Third type that I look to. And the central bankers will appreciate this example. And some of those in the financial services sector as well. You have international companies that do business in this country. Asset managers, fund administrators, trust managers, whatever they may be. Right? And for exchange control purposes in the central bank, they're regarded as non-resident. Why? Because they're owned by a foreign person, doing business with foreign people, however operating from within the Bahamas. Right? So what if I put a corporate income tax on that? Say 10%, low percentage, 10%, and I get a double tax agreement. Right? In this same statement I read, it speaks about international tax treaties. Right? So now from a policy point of view, I've taken the international tax treaties, I've taxed a segment of the economy that would not impact the daily lives of Bahamians, right? I've put in a tax treaty to protect them because at home they're paying 35 and 40%, not 10%. So it will be respected here. And I've created another tax base. Right?
And it would draw more companies to come in at the time.
And it provides certainty, right? And predictability. And it could support growth. Expanding the tax base, putting in a new tax that would be credible, predictable, and support growth. Again, that's Ryan Pinder's position, right? So I look at those, and that's what I would, if I was a consultant, that's what I would recommend. So, but that is in the example of tax bases, different tax bases. That statement I read talks about different tax bases. Those are 3 separate tax bases that are new. All 3 of them would be new. All 3 of them would expand the tax base of this country.
I mean, so would you not want to not be selective with respect to the businesses or the individuals, the corporate entity that you're applying the tax base to? I'm more a proponent of a general corporate income tax, not a flat over. In which case you would incorporate or you would touch the gaming industry. You wouldn't touch the non-resident corporate industry as well. But it's simply across the board flat rate.
But your rate would have to be much higher than say 10%, right? I mean, your rate, if you're only taxing corporations, and remember in the value-added tax.
Sorry, I don't mean to the exclusion of that.
In addition to that.
Because VAT is a consumption tax, so it's human hand. You still have the business community.
And eliminate the business license fee.
The business license
eliminate
fee, in my humble opinion, needs to be totally revamped because it is taxing.
We talk about fairness and equity, right? That is a fee that is not fair and is inequitable. The business, how? Business license.
Why?
Okay, so I'm Rupert Roberts. I own Super Value, right? My margins on food, my net profit, 3%, 4%, very thin, right? Very thin. I'm going to pick on her because I've already picked on her today. I'm Nancy Kelly. I own Kelly's, right? My margin on those types of items are much larger. I don't know what our margins are, but let's say 30%, right? Let's say 30%, right? Super Value and Kelly's, let's assume, do the same turnover, right? So the effective rate is much higher on Rupert Roberts and Super Value because his profit margin is so low, because they're paying the same thing. And so he may be paying 50% of profits to business license, whereby Kelly's may be paying 15% of profits to business license, yet they're paying the same amount. It's inherently an unfair and inequitable way to tax.
It does not stimulate growth.
It does not stimulate growth. And heaven forbid the lawyer, right? The lawyer who has infinite profit margin, right? Because he has no cost of input except for operations. BC and rent. But he's got no, and he charging, how much you charge? $500 an hour? So, you know, he's really, except for bad debt and uncollected fees, on the services sector, the business license is really a small percentage of profits, theoretically, right? So that is a long discussion on tax base, but I think it's very important because tax base goes to the fundamental heart of tax policy and goes right down to what are you taxing and why are you taxing it? That's your tax base. So when you see new taxes and these types of things, it all affects the base. And if your base is too small, you can never tax enough because it gets smaller and smaller. And government grows and grows. And it's just an unsustainable model. You know, that's why you hear the Ministry of Finance say, this is unsustainable, we'll never pay our debt. Because ultimately you have to borrow more and borrow more and borrow more. Use more tax revenue to pay the interest, and your tax revenue is shrinking because your base is shrinking. theoretically, it's just an unsustainable tax model. So support growth. We've spoken about that. All elements of a tax system can impact growth, impact positively or negatively. Right? The position of Wendy's is 15% is adverse, 10% is okay. I don't get that. Governments who are imposing tax policy should be mindful of the effects will have on growth. So you don't do it in the dark. You have to be mindful of the effect on growth. And although we recognize tax policy can influence behavior and economic growth, we also agree that it's not the sole purpose or maybe even the primary purpose of tax reform. We've spoken tax reform today in the Bahamas means brought it in your base. So the primary reason is not to support growth. However, if a reason is not built in to support growth, you're in trouble. You're in trouble.
Should we then qualify growth with economic and make it economic growth? Because
Yes.
we're only talking about economic growth and no other.
But what other growth is not being?
Well, I
Give me an
just
example.
wondered if when we talk about competition, and so I wondered if when we talk about growth, we're talking about social advancement or some kind of connection with the growth to social advancement as well.
Well, the collection of revenue by a government should always be for the purpose of providing the key functions that a government is to provide. Social development, safety, these key areas, right, of revenue collection. That's why a government exists, to provide those key elements. So those theoretically should all, the development of social growth should always be a part of revenue collection because it is a fundamental responsibility of government.
Yeah, but I think that goes.
I got everybody going.
Sorry.
No.
What you just spoke of speaks more to the element of taxation for generating revenue for the government. In order for the government to do the things that it is supposed to do, which is provide for an economic environment in which businesses can thrive, provide for the safety of its citizens, etc. But in this instance, are we not talking more specifically about the economic growth?
This instance we are, yes.
The economic growth of the businesses and the economy.
No, that's right, because if I don't broaden my tax base, spread the taxes across the board, I will stymie economic growth, because I can go from taxing you 35% on duties to 70%. Right, no problem. All it is a change in the law, right? But with a narrow tax base, I have to go up a lot higher and a lot quicker to sustain the revenues I need, which will destroy economic growth. Right? Which will destroy economic growth. So you spread it out, you widen the base, you keep some incentives, keep the predictability that's necessary to support growth, and then you have the revenues to deal with the social aspects. You had it.
Well, I was going to say similar, but separate from that. When you say other than economic growth, what other growth or how we're going to talk, but we don't want, it can grow, it can cause growth, but it can cause growth in your ministry, where you have to hire more tax agents, enforcement.
Or retrain. If I'm doing a central taxing authority and I have a pool of people now who are in silos, and this goes to the administration arm, right? So we'll get there. But we have silos of business license over here, treasury over here, customs over here, real property tax collection over here. All of them affiliated with what we call inland revenue. All of them affiliated with inland revenue. Bring them together and retrain. So you may not have to hire. You may have to hire some. But you can't leave somebody who's working in business license all their life, right? And then say, I just don't have no job for you no more. How about I invest in you, we're reforming and centralizing. You may have to now know, how to read a customs declaration and do a business license form and look at a value-added tax return. I mean, you may now have to be consolidated, right?
Well, I was just saying, I don't want the ministry and the government to grow and we still
Well,
not economically
Okay,
grow the same.
I
That
will
was
give
why-
you the last part of my philosophy my 3 prongs tax reform philosophy that I explained, right? So we had the domestic casinos, we had a 10% VAT, and we had this non-resident operating business corporate income tax. And then my 4th element was that 50% of the revenue from domestic gaming business goes straight to the debt. Tie it in by matter of law, I don't care, straight to the debt. And I will not increase the VAT rate unless I get to 60% of debt to GDP. Right? So now you have a standard to judge me on. Because 1, I have a trigger built into my VAT rate increase. I can't increase it for any other reason. And I have a direct payment on debt. Right? Direct payment. So now you can say, oh, Ryan, you were directly paying down the debt because I know you were allocating these funds to do so. Yet you overspent to cause me to get a 15% tax rate. I ain't voting for you next time. Right? Gives me an objective level to be determined on. Now, granted, that's a new generation type of thinking, right? But it is what it is, right? How can I instill the confidence of predictability and fairness of a tax reform policy, what we've been talking about, right? And then sell this to you as something that needs to be done if there are no benchmarks for you to judge me. Remember we said fairness is on both the industry side and the government side, right? So that's the 3rd trigger in my personal analysis. Not speaking on behalf.
There's one last aspect on this, just to wrap my mind on this. Okay, now we know that we need the 200, right? I'm assuming that you factored in, this has been factored in with the reduction in the customs duties, right? Now, this is a double-edged sword, because with the ascension to WTO, that's taking customs out of the picture.
That's not true.
No. So we just, so how is this going to work?
Okay, because you've connected WTO to taxation, I guess I'm in the realm of Miguel's rules, right? Tax only.
Yeah.
And I'm also the minister responsible for trade in the WTO session, right? So, the position we have maintained with respect to our WTO office, and the WTO with respect to your tariff rates works in this fashion. So you're Canada, right? I don't negotiate with the WTO. I negotiate with Canada. Canada says, Ryan, I want to negotiate with you on these 20 products. These are the rates I want. Right? And you're the United States. Ryan, these are the 30 products that I want, and these are the rates I want. Right? And I say, okay, let's see how we can manage this. And let's assume we all come to an agreement, right? You want 10% on agriculture, you want 10% on beef, these types of things that are important to you as trading jurisdictions. And we come to a consensus, and then I have kept my water tariff rate at 70% because I have how many water companies in this country employing how many people, and so what we call peaks and valleys, that's part of the offer. Right? Some things we don't produce at all, I go to 0, right? Because it's a consumer benefit issue. You look at the effect on revenue, it's not a big effect. Like steel, let's look at steel. You think steel goes into everything, right? Well, the percentage of revenue on steel to the government is like 10% of what it should be. Why? Because all these concessions you give them. Building hotels and this, that, manufacturing plants and all of that, you don't pay duty on. So steel doesn't have a real revenue impact to the government, even though you think it might. It doesn't. Because our concessions eliminated. So I go to 0% on steel. They're happy. Pittsburgh manufactures steel. They want to export at no tariff rate. So those are the types of things we look at when we formulate these offers. My offer now, the second offer we've made to the WTO, keeps 70% on water. It allows me to go from 0%, which the current rate is on agriculture, believe it or not, up to 40%. Even though it's 0%, I put 40%. Why? Because I'm going to want to go up in certain rates to help my agriculturalists. Right? And our average tariff rate now is like, on the offer, I think it's like 19%. While still having 70% into sensitive areas in higher rates. So that's how the process works. And once I agree with you on your 10 or 20 items, and you on your 30 items, we sign off, it's called bilateral. Right? We sign off. That applies to everybody that's a member of the WTO. Right? That's how that works. So we look at it. So really, I have a lot of control in the revenue numbers of the government. So if I can negotiate accession, preserving more revenue than we think we can preserve, your base is higher there and you can go lower here. So you can maybe go to an 8% value. Right? That's how that balances out. It's all, remember, it's all about tax base. It all comes down to tax base and what you're going to do with it. Trade in W2 is very technical and very complex, but that's like, I don't know if we've had a lot of questions, but we've talked about economic growth a lot. The last basic principle, then we'll break for refreshments before we get into the other set, has to do with support competition. I think there was a question earlier about competition. So consistent with the mandate to promote economic growth we spoke about, tax policy can be used to help generate a competitive environment. And this is especially important in a global atmosphere. So you want to create competition by maintaining stability and minimizing distortions. We talked about that. You don't want to shift from year to year because it makes you anti-competitive. And you want to provide stability and predictability, which provides confidence. And when a business has confidence, they will invest and expand. When you're not confident in your future, I mean, we've heard that by some very alarmist statements about that, right? I was going to build $1 million extension, I'm not doing that anymore. Right? We hear that in the press, right? You know? I was going to do this, I'm not doing it anymore. I was going to hire 10 people, I'm going to fire 10 now, right? I don't know, these are the alarmist statements you're hearing in the press, right? And not all of them are rational, but some of them may be a lack of understanding, but they're there, right? Why is that? Because they are losing confidence because of a change, right? They're believing they're going to be less competitive with the change, losing confidence, therefore they're not looking to grow. Right? So the theory is logical, and it's a human reaction of changes in tax policy. Remember, going back to the beginning, you don't like change, especially something like tax. Tax is not easy and it's not simple, and tax changes take a tremendous amount of political will. These are the reasons why, right? And if in a global economy, which Bahamas participates, many of our businesses here are international businesses, internationally owned. It's just a fact of the matter. We're actually a very international business, country. In fact, going back to your question on trade, people always say, well, we don't export nothing. Right? That's not true. You have Porco, one of the largest oil exporters in this hemisphere. You have Morton Salt, everything is exported there. Polymers in Freeport, we export hundreds of millions of products. We export. However, if you look at the combined statistics, this is the Department of Statistics numbers, trade in goods and services, we almost have a trade balance based on what we import versus we export when you factor in services. So we are a global economy. We're just a services-based global economy. However, if you're not competitive by international standards in a global environment, you will not be competitive. You will not be competitive. And it's not just tax rate, right? Although they have a significant bearing on it. It's the stability of the tax system as a whole. Predictability. that breeds competition. So that's another basic principle of tax policy, support competition. So we talked about we must maintain competitiveness in a global environment in order to succeed. We must be able to be predictable. And we talk about the alarmist statements in the press today of tax reform and how it's going to impede competition and then not going to invest in growth. So before we go on the procedural principles, I've spoken a lot. It's almost 2, believe it or not. We can take a short break. I think they brought some refreshments. Then we'll go into procedural principles, and then we'll deal with some of the administrative aspects of tax administration, and then we'll conclude. Did everybody enjoy tax? Oh, yeah.
Where is this from? That's it.
If you don't mind, email the slides, and my
Afterwards.
yeah. So how's it going? I don't see much now. Yeah. Taxes also not the easiest thing. It's important to focus on.
Yeah. Is there a good
Yeah, well, the overall policy point of view, I guess it only prepares me for. Oh, yeah? Yeah, I'm speaking as the ACAM course.
microwave? It does microwave like yours.
Yeah, good, you little one.
Oh, I'm speaking on that. That's a good time. You know, my first time teaching, the law school was asked me to come teach, and I kind of put the law.
So that's an ongoing issue. So employees are collecting costs.
You know, it's an area that, yeah, and I go through all my I just saw.
There's no more. So we move to that.
I'm very excited.
Are they gonna bring some more, or are we not allowed? No? No, it's too late. Don't say it's not one Friday. I got our- Somebody else got four? Oh, we had four.
More people?
Oh, yeah.
Hey, meet me up here.
Look at, there's a gentleman by there, I don't know what he got.
That's okay.
No, there was a gentleman back there, I'm not sure what he got. Yeah, this one. I don't know if he, this gentleman on the phone back there, I don't know.
Three. Well.